Tuesday, November 28th, 10 o'clock California time, just a little after the middle of the trading day for stocks and stock indexes. I start out with the stock market indexes, the S&P 500 typically, E-mini in particular, and go to futures and sometimes forex sectors and other markets. So we have a bearish engulfing ER sell signal in progress today, right this moment. In the E-mini, which is popped just a little bit higher on the day right now, but we have an outside trading range, and if it closes below yesterday's close, we will have an official red ER sell signal. Momentarily, it's a little higher. So at the end of the day, it won't be a sell signal. But all the makings are here. All we have to do is slip just a modest amount. Right now, the spider is only up 1/3 of a point, nothing. While my YouTube recording is developing, you might want to take a peek at these numbers in the top left to see if any of them have turned red. For the spider, net change being lower on the day. If it's red right now, it's up 30 cents. DIA is up only 40, very small amounts, and a lot of volatility happening here. The QQQ is now down 20 or 30 cents on the day, 40 cents, 50. Things are dropping oh my God, look at this. The S&P has just dropped like a rock. Let's go to our other charts and look at the details here. We have a bearish engulfing, and if these markets close lower today, this should be the beginning. I've been saying this for a few days now and expecting something like this to develop, but it has to stay weak. You can't come back up and close strong on the day. We just broke sharply a few moments ago on a big spike down on the spider. That's why this turned red. We're currently trading right here. We just had some new news come out of some sort. I am not a news person. You'll never know timely enough what the news is. You'll see it in the price action in a timely way, but you won't be able to, discern what it was until after the fact. So this is great. A lot of volatility all of a sudden while I'm recording my YouTube. Excellent. Again, I want these numbers to stay red. We're only down a little bit. We're up a little bit and down a little bit. So keep your eyes on these numbers. Next, we've got an outside down day in the S&P 500 spider, bearish engulfing sell signal. This should be, if we stay weak, if we stay lower than yesterday's close, the beginning of a decline down to close at least, I think, 441.60-ish, the highest of a few gaps. There is also a chance that because before the Santa Claus rally, which is something I'm going to detail to the minute in the next couple of weeks, again and again, but I got to update things a minor amount before I want to give you the details. This is setting up for the decline into the buying opportunity for the Santa Claus rally, which is just before Christmas. This is developing very nicely at this point. Okay, next chart. We've got the QQQs. Drop like a rock here all of a sudden. Now, this is the 1 minute chart on the Qs. You'll notice that we have a red line here. That was the new short sale trigger, and I'll show you the daily chart in a moment that generated the sell signal. So we got short this morning, California time, in the ballpark of around exactly 751. Made a little money, lost a little bit. Now it's come back to a profitable trade at this moment, and I'm expecting it to go a lot lower. Next chart is the Qs. The amount minimum is 378.40. On the downside, we're 389.15 at this tick. So if this market continues to work lower, it's going to be an awfully good trade and a setup again for the Santa Claus rally, which is basically buying one of the major stock market indexes. I use the S&P just before Christmas. Okay. And again, to the minute and date, I will tell you, and the track record for the last 30 years, what it has been. Next chart, NASDAQ futures, bearish engulfing yesterday. We did not get stopped out, came close on the rally this morning, and we are still short. This is a little bit delayed data, so this is probably now at the moment net lower instead of showing, because it's a little delayed, slightly higher. Next chart. We've got the DIA, which had a sell signal that didn't work. We got stopped out this morning after getting short on the opening, lost a little, but I'm looking at the potential of another signal back to back. So we will potentially get back into a short position if it closes appropriately to generate a new signal. Next chart, DIA, daily data. You can see here it's still in a resistance area, and it's still overbought, and it's almost having another bearish engulfing. They're very rare to be exactly back to back. They're usually a few days apart, but I've seen them back to back, and this could set up something just like that. We'll see what happens by the end of the day. Tune in tomorrow to see what happened. Next, we've got the Russell 2000, which now has an outside down day, officially a bearish engulfing candlestick, but because we weren't overbought within the allotted number of past days, we're not going to get a red bar. Everything is here, including a resistance area that has stopped these rallies. The only thing that's missing is the overbought condition, again, within a few days, and then this would be red. So it's so close, it's awful good looking. And that's it for stock indexes. But today is a very profound day, I believe. Looking at the futures from the standpoint of a little bit different perspective on the E-mini, we've got the Christmas E-mini with a bearish engulfing. At the moment, it is a tiny bit higher, a couple of ticks really. And I'm thinking it's going to stay south, lower, and generate a legitimate signal. But that's only based on the close relative to other levels. So if you have a signal right now, it may not necessarily be one on the close. Next chart, NASDAQ. Yesterday, bearish engulfing, still good signals, still we're short ER1 and ER3, looking for a big decline here. Next, bond market. Now, a little resistance, not really a great resistance level, seems to be stopping the rallies. Today is the same high that we had late and middle last week. So if we can't close above today's highs, it'll be a little bit more profound resistance. And if it closes lower, we've got a minor bearish reversal, but we'll see what happens. Bonds going down would tend to help the stock indexes head lower. Now, I am bullish on bonds, but it deserves to have a bit of a correction. We did buy it right almost at the bottom, the low day. We got a bullish engulfing ER buy signal, period, at the almost the high of the rally way back here for a gigantic bearish longer term position. We got short. That green line represents the trade from the beginning short to the end offset. Here we're long, and we're not out of the trade yet. This is our, excuse me, this is our trailing STS smart trailing stop. So we have a ways down to go before we get stopped out, excuse me, using the inputs that we are using at the moment. And they are flexible. Yeah, we recommend specific ones, but we'll be teaching you, if you acquire the software for TradeStation or NinjaTrader, that would be ER signals, how to make adjustments and what to do, when to do it, why to do it, where to do it, etc. Now, trade 10-year notes, same thing. We're long from the bottom for all practical purposes. We still have the trade. We have a trailing stop protecting a large profit at this particular point, and we did make a new high, but this is different. We have a head and shoulder bottom. It is a little lopsided. I've seen lots of them that are better looking than this. But the point is, the neckline was challenged in the last couple of weeks and crossed, but it didn't close above it. Look we're doing right now. We're back above the neckline. We seem to be staying above the neckline. And if it closes above the neckline, we have a bullish breakout with a minimum upside objective of 112 and 24/30 seconds, almost 113. We're trading at a little below 110 right now. Lots of profitable elbow room for a position trade or a swing trade. I imagine it'll take 1 to 2 months at the most. And I've said many times in the last couple of months that I am looking for a major long-term bottom, which we seem to be building or built. And the trend may have started, and the trend should last a couple of years. I'm looking for a lot higher levels than just the minimum upside objective of a little shy of 113. Frankly, above 120 in the many months to come. Next, crude. We bounced off support, got oversold. Great combination, one of my favorites. Rallying a little bit, but we're kind of between a rock and a hard spot here. And I think we're going to rally a little bit more and then roll back down again. Nothing major here in terms of upside, downside objectives at the moment. We got natural gas, big sideways trading range has finally started to make new lows like I had forecasted. Support has been broken. Now we're getting a little oversold the last couple of days. So I am expecting it to bounce very soon and probably back into the greens resistance zone here, and then probably lower again, like corn and wheat have been doing. I know there's not much relation to natural gas and corn or wheat, but it's the charts that look similar. Next, high heating oil bounce out of the support area, off of a support line. And again, I think there's a chance, but it's waning a little bit, that this could be a shoulder and then the head of the formation, and a shoulder, a double shoulder, head and shoulder top. I drew in the neckline. It got tested, but it was oversold and didn't get broken on a closing basis. And now we're rallying. I'm going to wait to see what happens here for a longer term trade. So this could be topping out. The rally in the last couple of weeks doesn't kill the formation, but it is a little bit unusual. Next, gold. Whopping rally today, but it got overbought. Now we're punching through the high end of the resistance area and moving out of it. If it stays here, we have to look at what happens when it comes back down to about 2053. If it bounces off of that and keeps going back up, then you got a longer term bull trend perpetuating itself. Right now, overbought conditions on this breakout of sorts, it's not closed yet, could be pretty bullish. I don't know. I'm a little skeptical. I'm going to wait again on gold, silver, but I do have to point out to you guys, we bought the bottom, we sold a high. This was a bad signal right there. We bought the bottom, we sold a high, and back here we bought the bottom and we sold a high. So a lot of these signals are the turning day exactly, and that's why I built ER signals. Well, probably 20 years ago, I started fiddling around with this technique. Next, silver. Same thing here. Precious metals have been great for us this year, and we're almost in December. As of Friday, it's December 1st. So sold the rally high, sold the rally high, sold the top, sold the top. Bought the bottom, bought a low, bought a low. Most of these signals have been excellent, not all of them. Let's get rid of that little thing right there. Okay, next chart. Oh, and on silver, overbought, resistance. It looks like it's supposed to turn back down again around where it is, maybe a squeak higher, but not too much more, maybe around 25.80, but again, not too much more. Next, platinum, trying to come up. There's an old gap to close. So we got to pay attention to that at 973 and a half-ish. And it could do it in the next day or two and then turn down. We might also get overbought at the same time, which would be a great combination for a potential sell signal. We got the bottom right there. We got the top. We got the bottom. We got the bottom. We got the top. What can I say? Almost the top, the high. Okay, next. High-grade copper. Longer-term bear trend. We've rallied quite a bit and did get overbought. This bullish engulfing today implies that we're going to start going up some more. The resistance area that it might stop at, I'll bring it over to the right here. That's about right. Is something to watch if we can start making another set of new highs above last week. I'm a little skeptical. I'm going to wait on this. Soybeans. We're still long. It was a little scary yesterday. Came close to our trailing stop. That's the yellow line. And did not hit our stop. We are now doing very well. We have a good profitable trade. We bought the bottom. We sold the high. We got close to the bottom on that buy signal. And we got close to the bottom there, but that was not a good signal because we made a lower low after the signal. That's a no-no. If you see red, no more new highs. If you see green, no more new lows, until a long-term, whatever, a lot of time has passed and a big move has passed. And this is still in progress, looking good. I think soybeans have a chance of going up and testing the 1390s again. Next, bean oil. We were short, we sold the high, we got short. We talked about this at the time. The head and shoulder top, which worked great, had a minimum downside objective of 50. It got down a little bit lower than that at 47.95, 48 or so. Oversold, turned around, stopped us out of our longer term trade, and looks like it's going to rally a little bit more. I have to be short term a little friendly, but longer term it's a little ambiguous. Next, soybean meal got overbought in slight new high ground and couldn't stay there. And down we go. Now, the last few days have been almost sideways. The highs are very similar. The lows are almost the same. So you got sideways. But to me, this looks like a double top formation on a long-term situation developing. If we start heading south and close below 417, I'm going to start screaming bloody murder that this is a double top. And the downside objective could be way down here at 240-ish. Yep, but it'll take months. Next, corn. Yep, got oversold today. New low ground. Going to rally a little bit, hit resistance, turn down, make new lows again. I've been saying corn's going to go the way of wheat, and here's wheat. It did it. It's doing it. It's going to do it again. It loves doing it. Next, corn, cattle. Wow. 2 days with the sharp break, got oversold a lot. So here's our rally all of a sudden. Whenever you see yellow on a decline, it means you're getting oversold. Don't go short. If you are short already, look to tighten your stops, look to take partial profits, look for buy signals to get the heck out of your shorts, and go long. Look for new long signals. Yeah, we didn't get one today, but we might in the next few days. I'm looking for a rally, but the trend is down and the rally won't go up that much and last that long probably, and then it'll turn down again. But probably more of a rally than what we've got so far. Next, hogs. Same thing. Support didn't hold like I thought it might, but the oversold condition is also some major consideration. And I think we're going to go back up to, I suppose, 74 and maybe a little higher, and then turn down again. Next, OJ. Well, we had a fantastic sell signal that worked for about a week, and then that was the end of that. I thought it was going to be much more profound than what it was. And again, that was back in late October, early November. But we have another sell signal, and we are still short. And at the moment, we're high and last, and it looks like we actually are stopped out just a little while ago. I didn't realize that until just now. So we have a modestly profitable trade in soybean oil, OJ. And I'm standing aside for the moment. Cocoa is now overbought in new high ground. Watch for sell signals. If you're long, tighten your stops up, take partial profits, look for sell signals, look for reasons to take your money and run, and look for potential new short sell signals and trades. Next, coffee. No comment. Except I do like my espresso in the morning. Next, sugar. Same kind of comment. Looks like it's rolling over. If it starts to break down a little bit more aggressively, then I'll be talking about this big blue support area being tested again. Right now, I'll pass. And lastly, cotton the rag did bounce off a support area at the very bottom very accurately. That rally's done. Now it's trying to bounce off the support area again, just the high end of it instead of the low. And we'll see if it can do this. Don't have a real strong opinion here. Not quite oversold yet. Let's go back to E-mini for a quick look. We are still lower, but not by much. On the spider, only 30 cents lower. Now the DIA is 30 cents, 40 cents higher, and the Qs are still lower. What I want is for these red numbers to turn larger, lower, quicker, and I want the DIA to turn down also. Again, it's my opinion that the indexes are starting to roll over and move down for 2 to 3 weeks into close to just before Santa Claus rally. You guys have a great day. Profitable trading to you.